It is not new news to say that Bitcoin is a behemoth in the industry of crypto. Ever since it was established, it has gained enough momentum in the market to actually gather a large amount of investors, capitalizing on the increasing demand that is coupled with the finite number of Bitcoin available in the market. It is secure, becoming more and more ubiquitous to a point that it is now accepted as a mode of payment in some major brands. And, as I have said, its price continues to increase as people line up to become their very own Bitcoiners. There will only be 21 million Bitcoin available in the market, so as investors flock into its space, applying the laws of supply and demand, the scarcity will only cause each coin's price to increase. These are only a few of the many reasons why experts and investors think Bitcoin is becoming the future, and we have yet to learn from it. This is Diversified Streams, your go-to YouTube channel for all things crypto. If you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto, and make sure to keep your notifications on so you'll be updated with our latest videos. We post frequently so you wouldn't want to miss it. In today's video, we will be talking about the price predictions in Bitcoin. As the merger draws near and other things happen in the crypto market, what are the odds of one Bitcoin amounting to $300,000? Will it be hard to get there? Or are we going to experience it sooner than what everyone is expecting? These questions and more will be answered, so let's get started. First things first, this $300,000 price prediction is not something that we decided on ourselves. In fact, it came from the CEO of SkyBridge Capital, and a legend of crypto, if I may add, Anthony Scaramucci. He did an interview very recently, and his whole talk about Bitcoin gives off the tone that he still has a firm belief in the coin, alongside Ethereum, and basically the whole industry of crypto. And he's very vocal about his thoughts, suggesting to his clients that it is not impossible for Bitcoin to arrive at a price point of $300K in about 5 years, by 2028. When asked about his constructive view of the Bitcoin and Ethereum space, Scaramucci says that they are both the biggest entities in the industry, and with the power of Lightning Network on one hand and the increasing number of investors in the other, it will not be a complete surprise to see Bitcoin engaging in some higher-level transactions and boosting its economy. The same is said for Ethereum, as Scaramucci sees the silver lining in the merge that is about to happen the same way everybody does. Everyone is buying the rumor that's surrounding this eventful process, and this will cause the transaction fees in the network of Ethereum to go lower, something that a lot of people would generally want to see happen. But of course Scaramucci isn't all too good about this. He still thinks that we should be cautious of the steps that we will be taking despite the flourishing economy of Bitcoin and Ethereum. He went on to say that if it ever reaches a point that Bitcoin is finally valued at $300,000, the price you bought the coin for would be an irrelevant piece of information, but the future is approaching faster than what most of us think, so that's also one thing to consider. After all, there will only ever be 21 million Bitcoins in the market for people to trade, and this will someday turn into a rare asset if the excitement does not die down, and the market grows even bigger. Demand will skyrocket before you know it, and you want to be in the best position to watch Bitcoin's value go up as people explore the crypto market just to be an owner of one. When making these assumptions, and especially these types of assumptions come from people who spend probably 18 hours of their day analyzing the market, it is difficult to say that it is unlikely or will not happen at all. If you have been around since the beginning, you would know how difficult the journey was for the developers of Bitcoin to get the project going. It was something that's known only to a few people, and of course, doubts were much more evident than courage. But this is how everything works. The network starts off as a small dot, then the Internet of Things makes it bigger and bigger. Before you know it, Bitcoin is already the talk of the town, and people are itching to get involved. Connections are established, information is passed on from one person to the other, causing Bitcoin to grow exponentially and reach the point it has reached now. It is also because of this network effect that we are seeing institutional investors with a pocket full of funds entering the market of Bitcoin and other blockchain companies. We started from nothing, and as the news of its opportunities reached those who hold great control of different industries, we are seeing a collision of networks. Giants like Microsoft, PayPal, Tencent, and American Express are now entering the forum, and we are ultimately seeing these companies transition into crypto and the already existing crypto companies branching out their services. Do you also think that we are on our way to seeing Bitcoin being valued at 300K? Do you think that this assumption is too optimistic or just right? Let us know your thoughts in the comments down below, and let's strike some meaningful conversations in there. Also, while you're at it, please do us a small favor by giving this video a big thumbs up and subscribing to our channel. It helps us get the word out about crypto, and you'll officially be a part of the community. And back to our video. There are other points Scaramucci had made in the interview that are worth discussing, and one is about whether or not we should be trading Ethereum in line with the merge that is set to take place sometime in September. Does he think that it is very profitable to be trading Ethereum given the market condition? Anthony believes that it is really a matter of what you are between the two. Are you a long-term investor or a short-term trader? If you plan on investing for long, like most experts do, it is much better to keep your assets with you and not create any unnecessary friction in the market. The last time traders tried to do this, the rate of return dropped down from 7.5% to 2%. And that is something we do not want our portfolios to keep a record of. It is just not a good image to see. Last time, it stood at 45%, and investors like Anthony decided to keep holding on their assets and maintain a great deal of discipline when it comes to their decisions. The same cannot be said for short-term investors though, as they really get a little too emotional whenever these things happen. So if you want to think long-term and get even more rewarding gains, setting this one out might be the best option. So from this, we can tell that Scaramucci best thinks that it is much better to keep your coins with you, and just wait until everything becomes valuable enough to actually trade. In other news, Citigroup, which we had just included in the list of giants investing in crypto, also seems to be bullish on the merge that is happening in Ethereum. In the recent report of one of the biggest financial services in the world, they revealed that the protocol upgrade that will happen in Ethereum, which is basically the transition of the network from proof of work to proof of stake, will cause the block time to drop from 13 seconds to 12, which will also cause the fees to decrease. Citigroup believes that with the merge coming up, the overall issuance of Ether will go down by 4.2% a year, and will eventually cause Ether to become deflationary. While the market continues to go big, it also simultaneously tries to make it more efficient by discarding those that do not seem to be performing enough and contributing to the overall economy of the industry. This is something that we are seeing with the recent action of the SEC, which recently filed suit against Dragon Chain over 16.5 million ICO, or initial coin offerings. If you do not remember Dragon Chain, they had this collaboration with Disney that didn't quite go as planned. It could be possible that they will get sued for the unregistered securities that they were trying to use. But even if they were to be given some sort of leniency despite what they've done, and maybe even operate, the project is hardly making a fuss in the market. The last update we have for you is about the recent news with Akala, the stablecoin from Polkadot that we just recently made an initial report. Following their situation, it seems like they are trying to get back on their knees pretty quickly, as the native stablecoin of Akala, which is called AUSD, is making small steps by voting to destroy $1.29 AUSD as part of the recovery process. 95% of the voters agreed to doing this action in order to help Akala regain its dollar peg in no time. This is a quick and efficient display of strategicness in order to recover from a massive downfall. Other projects can learn from this. And that wraps up today's video. I hope you found today's content interesting and informative. If you are interested in watching these types of videos, show us some support by giving this video a big thumbs up and subscribing to our channel. Make sure to turn your notifications on so you'll be notified whenever we post new content. This was Diversified Streams. Thanks for tuning in, and see you in our next video.